This is the Future Talk, charting a new financial course, mobilizing climate action from COP29 to COP30. Please welcome to the stage, Silvia Pavoni from the Banker Financial Times.
Hello, everyone. Thank you so much for joining us at this, what is going to be, I am sure, a very interesting discussion. We're going to talk, as you've heard, about charting a new course. We are now approaching a few months of COP30, a big important deadline in everyone's calendar, everyone looking at climate finance, but really anyone who is serious about creating a resilient future for our economies and any economic activity. My name is Silvia Pavoni. I'm the editor-in-chief of The Banker, which is a publication part of the Financial Times Group. And just as this event, we at The Banker are keen to host a variety of views that will help to push forward the discussion on sustainable finance, climate finance, and what can help to shape, as I said, a more resilient future. So ranging from big names within governments to climate activists and anyone outside of the financial and government worlds who think they can contribute to improving the discussion and where we are. Before launching into what I know is going to be a lively conversation, I'm going to invite on stage, indeed, a very big name in international discussions around climate, who is Jochen Flasbarth, the State Secretary with the German Federal Ministry for the Environment, Climate Action, Nature Conservation and Nuclear Safety. Welcome on stage.
Ladies and gentlemen, colleagues, friends, Cristina, Ambroise, Avinash, again, all good friends. Thanks for the nice introduction. Only a bit more than half a year ago that we had the first edition of the Hamburg Sustainability Conference. A lot has changed in the world since that, also in my personal life. I'm back at the Ministry for Environment and Climate. But having the chance to connect these two policy fields internationally, we are at a stage where private sector investment is needed. That was already clear prior to Baku, but now we are in a different world. We have agreed on the NCQG. And this means 1.3 trillion. I mentioned it already this morning at the Green Guarantee meeting. When we discussed it in Baku, I was hesitant to communicate these big numbers in our national audiences because people get puzzled. How the hell should we organize this money? Will this all come from budgets? What does it mean for the needed investments in our own countries, and that in a world that is less solidaric than it was a year ago, with the moving away from many international arenas by the US, but also with reluctance of other countries, and also increasing suspicion in countries like my own. So we have to work hard, and we have to make crystal clear that this will not all come from national budgets, public budgets. It's impossible, and even if it was possible, it would be wrong. Because what we want to do is to change the logic of the economy. We want to make the green investments the new normal, and we want to phase out the brown investments. And therefore, a lot of instruments and changes are needed. As I said this morning, we had, even before the official opening, the meeting of the Green Guarantee group shared by our good friend Henrik Röller. And this Green Guarantees is just one instrument, a very important one, but more is needed. And we do support this with from the German side, with our international climate initiative, ICI, and I just want to give some examples. And one is we need to shrink the cases and that we need public money at all. And that is the enabling environment. And I know 10 years ago when we discussed the enabling environment, I see Carsten Sachs there, he remembers it very well. Enabling environment was not really liked by our development country partners. They thought that we are pushing the ball back into their field, but it was not at no time the case. What we need to do is to create environments, regulatory environments, where the financial flows, the private financial flows, go into the direction of climate action and climate neutrality at the end. So with ICI, we supported, for example, an emission trading scheme in Mexico as one pillar, one instrument, one regulatory instrument to put a CO2 price on the production in order to move the investment into this direction. And another example I want to mention, although it is not in my paper here, but because I like it so much, is JET-P in South Africa, where we supported our South African friends in changing their electricity regulation in a way that there is non-discriminatory access to the grid for electricity supply. So with these changes in the regulation, each and every windmill, wind park, solar park is a business case now, given the conditions in South Africa. You don't need any ODA penny at all. And it was brave enough, although this affects electricity architecture in South Africa a lot, basically Eskom, the monopolist, it was brave enough that South Africa's president Ramaphosa held the hand over it until the very end. And even 2 weeks prior to the national elections, he brought it to the two chambers. I have some doubts whether we would have done it at that time. So a lot of applause for this kind of change regulation. The second part I want to touch upon is the financial sector itself. The ICI supports the development of instruments for risk assessments in the banking sector, as well as sustainable finance policies. With the IDB, we have been cooperating on green taxonomies in Latin America very successfully, I would say. And if you don't have the taxonomy right, investors will not have the full picture for their investment decision. And the third one are the financial instruments in the field of de-risking. Basically the backbone of all private sector involvement to de-risk, not each and every risk. Entrepreneurs are there to take the risk, a reasonable risk, but not each and every one. We, together with MDBs and our German KfW, we created the climate syndication platform CSB with EBRD, also to look at CSP first bundles B-loan private institutional investors, and then it provides an extra credit protection for these investors through pooled first loss risk cover, and this again financed by our ICI. We invested a lot during the last year, more than 400 million euros, and they catalyzed 1 billion euros. And finally, the cooperation between ICI and the Climate Private Sector Mobilization Fund, which was created to booster blended finance and in climate action areas. So, colleagues and friends, a lot is already done. We need to do more. 1.3 trillion is a lot. So 2035 is 10 years away. But looking back in 2015, we know it's already around the corner. Thanks a lot.
Thank you so much, Jochen. 1.3 trillion is a huge amount of money. I mean, as you say, to quote you, how the hell are we going to mobilize and organize this capital, this amount of money? So to do that, I'm going to invite, or to try and address this question, I'm going to invite my panelists on stage. Please join me, and once here, I'm going to introduce them to you. welcome to my wonderful panelists, and thank you for the glass of water, very much needed, I'm sure. So right next to me, we have Avinash Persaud, who is a really well-known, of course, figure in climate diplomacy, but also climate finance. He's now a special advisor to the president of the Inter-American Development Bank, which has already been mentioned by Jochen earlier on stage. Next to Avi, we have Cristina, Fróes, Borja, Reis, who is Sub-Secretary of Sustainable Economic Development at the Ministry of Finance of Brazil. Of course, Brazil is going to host the next COP in a few months. Welcome, Cristina. And last but of course not least, we have Ambroise Fayolle, who is the Vice President of the European Investment Bank, a big player within Europe and beyond when it comes to climate finance and also risk. So shall we try and address the question that Jochen posed to everyone? How the hell are we going to organize this capital? Avi, shall I start with you? Because of course, we've been talking about the participation and the cooperation between governments and private sector investor and banks, commercial banks, for a long time. A lot has been done, yet those 1.3 trillion are still there. What do we need to do next?
We have an idea. These finance gaps are huge. At the same time, ODA, Overseas Development Assistance, regrettably, dangerously, is shrinking. And the private sector has been called upon for quite some time. So we're almost 10 years now since Financing for Development 3 in Addis. And back then, trillions of dollars of private sector was promised, money to flow, and it hasn't come. So we have an idea. And I think the idea rests on a realization, for me at least. Other people may have realized this earlier. But finance is structural. We don't teach it that way. We teach that if something makes money, people will invest in it. But the reality is that's not the case. So the trillions of dollars we talk about is actually institutional investor money. That's pension funds, life insurance companies, etc. They don't invest in everything. They want BBB rated, euro denominated or dollar denominated, 7.5% yield instruments. And in the emerging markets, we offer them unrated, unpermitted, unconstructed, early stage. And so they say, I'm interested, but it's not in the form we can have. So we think to break that puzzle, we're actually going to start with those instruments that are there already that have all those things. They are constructed, they have a permit, they're performing. In Latin America and the Caribbean, and we're talking globally here, but Latin America and the Caribbean, we have about $30 billion of those assets. So we want to put them together in a portfolio. We want to apply a regulatory guarantee and a foreign exchange guarantee and get it rated. And we believe that we will end up with BBB rating, 7.5% yields, euro-denominated, dollar-denominated. And we believe we can sell that to the institutional investor. And we only do that, putting together existing things, by saying to the people who currently own those things, we will pay you for those things on condition that you reinvest. So to end, the people who've already done the hard job of finding the assets, of managing the local regulator, managing the government, managing all of the incentives and penalties and taxes, we give them cash to do it again. And the people who say they're interested but they can't do that, we give them the instrument that they can manage, a rated instrument in the right currency that they want, with the yield they want. And so we think we can create this investment loop, and we do it over and over and over again. And I think that's the way you get to 1.3 trillion, because we can't scale retreating ODA, we can't scale blended finance, and we can't scale all these other things that we talk about. We need those things to play critical roles, but they won't scale.
All right, so I am going to ask you about a few of the details about how to get there in a second. But Cristina, first to you, of course, you represent a government, and there is still going to be a huge need for public funding into climate, and also for, I guess, activities and regulations and policies that may attract greater private capital towards those projects that Avi just mentioned. How do you view, for example, your government's role in this, of course, in addition to being the host of COP30?
All right, Sylvia, do you hear me? Yes, so guten Tag. And first of all, thank you very much for the invitation. and I come to represent the Ministry of Finance of Brazil, but the question is regarding all the, let's say, at least the Global South and the developing countries. So I agree with Persaud. I think that we have to build the correct and the efficient instruments, financial instruments, regulatory, tax and fiscal, and also administration and operation instruments as well. So I think that at least the way that we see from the Ministry of Finance is that we need coherence between those instruments. They have to pursue it to aim the same objectives. And those objectives for the Global South are always economic, social, and environmental and climate objectives. So we can use all of them all together to change the economic structure, I mean the production, the economic matrix, because without changing the way that the activities are produced in developing countries and also developed countries, we cannot make this change. We need a new productive, technological, financial, and even cultural paradigm. This is what we call in Brazil, the ecological transformation. And for us, it's not only about energy transition, it's ecological transformation, because we have historical and structural huge challenges. We have misery, we have hunger, we have a huge inequality, gender inequality, race inequality, regional inequality. So to fight this, we need the instruments. And I will talk about them more later, but we can think about those instruments, and that's the document we launched for COP Belém. When I say we, I mean the Ministry of Finance. We have to think about 4 pillars: the private sector and the international investors, the public sector and how to leverage, that's your question, our domestic capacity to make crowd-in investments. Then thirdly, the new role or modern role of the MDBs and of the climate funds, and an international regulatory agenda, such as Mr. Jochen Flasbarth was saying, regarding the interoperability of taxonomies, the interoperability of carbon markets, how the financial assets can be sure that they are really investing in sustainability, that they are not contributing to any kind of washing, greenwashing, blue washing. So there are many efforts, and we need a strong regulation for this as well.
All right. So much there to discuss. Of course, international regulation, I mean, can we actually have just one definition of what is a green asset? Potentially not. It is very much challenging. Europe has been very active in defining or trying to define green assets with the taxonomy. Of course, other parts of the world are also playing a role. We look at the US, where you were talking about culture. I think the culture around the discussion, the language around these activities is very much changed, and perhaps it is also influencing discussions in other parts of the world.
Yeah.
So very complex environment to define, to start to define these investments, and therefore also the risks associated to them. Ambroise, can I ask you to share a few thoughts about the importance of multilateral investment institutions such as yours, because of course we're talking about attracting private sector investments in combination with public funding, and MDBs just sit in between. But MDBs themselves are faced with challenges because of course they're allotted capital and their mandates are dependent on the views of the governments behind them. How challenging is this moment in time to talk about climate risks and finance?
Many thanks for the invitation first to the German authorities, and I would say just a few words on EIB because we are probably not that well known. What we do mostly is inside Europe, investment inside Europe. We do every year around 100 billion euros of loan. 10% is outside Europe, so it means still 10 billion euros of lending activity outside. And 60% is in climate-related investments. So all in all, 60 billion euros of investments for climate-related projects And this is the same proportion outside Europe, so 6 billion euros. That being said, I think the starting point is what Avinash said, and Jochen Flasbarth as well. We have to take that ODA money will be lower. And that has an impact on a number of things that are important in a number of structures. Not necessarily for guarantees, but certainly for first loss species and instruments like that. And that can be important if you want to attract private sector projects. So what we are trying to do at EIB is to reserve this complex structure where you need some first loss species, so budget money basically, to either projects with a significant impact or project with a really innovative structure. And if I can give one example of each, on impact, clearly the project that we have done with the Inter-American Development Bank in Barbados is one of those, where Barbados is a country that has a high debt level, no real room for increasing spending. And so the way to deal with that was to restructure, to bond repurchases so that it frees some resources because the new debt will be issued with the guarantee of IDB and EIB. And that has allowed to do some very, very interesting project for the country. Wastewater project in the southern part of the island. There are specific conditions attached to the success of these initiatives that has been very, very time consuming also, but that it is sure that it works. And the other example I wanted to give is the Global Green Bond Initiative launched with the European Commission and many European development finance institutions, where you have a big first loss piece of the European Commission and second loss pieces of all the others that will attract private sector bondholders. When we want to do is to increase significantly green bonds issued by the poor countries in the world who are not issuers so far and who have really interesting projects in green economy to finance. That being said, when I say we have to reserve those projects to this high innovative or impact, what I would say is the good thing is when you look at much more, normal projects, you have a lot of projects that you can finance to de-risk. And for example, we do that a lot with we lend for the financial institution to lend to SMEs active in climate, to SMEs active in gender and women empowerment, these kind of things. And what we see is 1/4 of what we do, especially in Africa, is to support these kind of projects. So to show that you don't necessarily have to have a significant amount of funding, of public funding, to develop finance in big proportions in Africa. What we do is we lend to local finance institutions, to the banks that are present in Africa. The Vista, the EcoBank, the BOAD, the TDB, etc. For them to look at the SMEs that they have in their portfolio and to develop this kind of projects. So there are not necessarily only bad news. There are also the fact that there is much more volume thanks to this risk sharing.
Thank you. So, of course, you're right. There isn't just bad news. A lot has been done and a lot of activities is taking place within governments, international institutions, and of course the private sector as well. Just to let you know, we are also going to take questions from the audience. So after speaking to the panelists just now, I'm going to invite you to ask your questions. So be ready. Don't miss the chance to ask them. Or maybe make a statement of things that you would like them to do in the future. So a lot is happening, yet perhaps when we speak, certainly at the bank with commercial banks, but also investors, the word risk does keep on popping up. Whether it is perceived risk, whether it's because there are so many distractions about where to go, where to invest, whether perhaps climate has changed in terms of a term that attracts a lot of interest, including from company CEOs, bank CEOs, governments, heads of governments, and ministries. And so, how do we, in practice, because I think we also want to try and be as practical as possible with this session, how do we invite those private investors to all this phenomenal activity that I know goes on in many markets, in many economies around the world? Cristina, can you give us a few examples of things that you would tell a private sector investor to convince them to come to your country, bearing in mind the concerns they might have about, as we said, general risk, foreign exchange risk, regulatory risk, policy risk, all of that?
Yeah, the investors could come, they should come, because there are the right instruments to prevent this foreign exchange volatility. You can borrow in national currencies, which is important for developing countries. There are technological routes that have competitive advantages in developing countries, both regarding biofuels, low carbon hydrogen. We can talk about the energy matrix, but we can also talk about traditional industries that are now decarbonizing and have new productive ways, right? And talking about the instruments, as I wanted to, I think, and this is already said, that our priority to COP is the Tropical Forest Forever facility. This can be, instead of ODA, the hugest investment amount that COP and the world will implement after 10 years of the Paris Agreement. The TFFF is a proposal that allows first to be standing with investments, and it's about to be concrete. It takes a few weeks to governments to decide to make this membership, this coalition that will put $25 billion, and then the private investors can provide another $100 billion, and to projects like nature-based solutions related to the bioeconomy, related to the circular economy, that can make the difference for the peoples in the territories. And this is why this TFFF is so important. But there are other channels as well. There are initiatives like the country investment platforms all around that are getting stronger, a kind of matching place for demand and supply of projects to be sure that these investments are going to new technological routes. Other alternatives relates to carbon markets. So both the voluntary and compliance carbon markets, there are more than 40 jurisdictions with carbon markets now, and this is a tool that can be very efficient on decarbonizing. And also the budgeting cycle, then when we look to the government perspective, the budgeting cycle has to have a sustainability perspective, and then both the spending and the public investments have to be directed to these projects that make sense with this new ecological paradigm.
Okay, so from the Brazilian government, then there is, you're saying, a commitment to include sustainability in your calculations about budgets,
Yes, for the
carbon markets, mechanisms that essentially helps with sharing of information and transparency about projects, and hopefully all of this is going to help a little bit with dealing with this risk that international investors may feel when looking at certain projects in certain markets. And perhaps can I go back to you and ask you about a few practical examples of things that you feel may persuade international investors to look into climate finance?
I would say two things that are not directly related to financial incentives.
Okay.
The one thing that I think is very important is that the multilateral development banks stay the course, that we keep the target of the climate strategies that we have decided to embark on.
So you're concerned that this may change, this course may change?
I am concerned to hear less about climate strategies than a year ago. And we will see.
Yeah.
But at least for EIB, we will stay the course. And we consider that the priority given to climate finance is essential, not only for the credibility of multilateral institutions, but also if they want to contribute really to the big challenges of this world. So the first thing would be, to me, please continue to consider climate as a key priority.
And you're speaking to your colleagues within international MDBs?
Not, I mean, it's something that is global. Huh? Okay. It's not, you see, in Europe as well, it is something that is more and more discussed.
Right.
And the second thing that is completely different is we are doing a lot of progress in an area that is extremely important for private sector and not necessarily discussed, which is data. Mm-hmm. And there is a very interesting initiative that has been launched a few years ago, which is called GEMS. It is a big database from major MDBs and bilateral institutions, to 27 of them, to provide data about default rates, recovery rates, these kind of issues, to give real numbers and not only perceptions about the risk of default if you invest in a geography or a country. And we have made so quick progress that we are now able to make projections that are by country, by sector. Of course, it is anonymized, but it pertains to 20,000 contracts over 40 years of experience of these institutions. And surprise, surprise, what do they see? Actually, the risk level and the default risk level in the poor part of the world is low, if not very low. So I think this kind of message also that has to be sent by the multilateral development banks, so that you can also give comfort to those private institutions interested in leveraging their activity in developing countries, that this is something that actually is not that necessarily risky. And it's important to come back to what Avinash was saying in his first answer, which is to scale up. Because we have more resources. And the G20 and the exercise that was done to give more resources in the capital adequacy review helps us. But we need also some non-financial initiatives to make this happen.
That is fascinating. Thank you so much. I mean, data, of course, trying to show with numbers, not just with words, the risk profile of these investments. Hopefully, is going to attract investors towards the right projects. Avi, I'm sure you agree with focusing on this.
I want to. In this room, we're a self-selected audience.
Yes.
So let me kill a few sacred cows. We actually have a lot of data now on the cost of capital for projects in developing countries. And so you can break it down. We know the cost of capital for a country to borrow money and for projects to borrow money. So we actually can break it down between what is the project risk and what is the country risk. Most people think that the risk of investing in developing countries is the projects. It's not. The project risk is actually as large as it is in developed countries, part of what Ambroise is saying. Indeed, in some cases, it's lower because the government guarantees everything. Mm-hmm. So the big risk is the macro risk. Let's kill another sacred cow. Because people think that's because these countries are badly managed. Most developing countries have lower debt to GDP ratios than many European countries. Mm-hmm. The problem with the macro risk is the system. About half of the problem is a system. Half the problem is that it's challenging being a developing country and economics is difficult. But half is the system. In the domestic financial system, we have a system where there's something called safe assets and they're risky assets. And we say government bonds are safe assets. So you must have some safe assets and then you could have some risky assets. We do the same thing internationally. The rating agencies, the accounting agencies, and they define the word into safe and risky, and all developing countries, none of their assets are defined as safe. Developing countries basically have to import their safety. They export risk, import safety. The euro, the dollar are defined not because of their debt to GDP ratios, they're high. They're defined as safe. And that means that when the world is in crisis, developing country currencies are falling as money flows out. They have to raise interest rates. They've got to cut the budget. They make the crisis worse. Investors see that. Rating agencies see that. And that's why they place a different risk premium on them. In Europe, when we're in a crisis, the ECB is able to respond to the crisis. The fiscal authority can respond to the crisis. The ECB can cut interest rates. Developing countries can't cut interest rates in a crisis. They have to jack them up. So how do we solve that problem? Firstly, we could make the multilateral development banks with their AAA ratings, like the EIB, like the IDB, they could be bigger. And as a result, we could use our AAA to borrow and spread that low borrowing cost to developing countries. Secondly, guarantees. There's an excellent initiative by the German government on the green guarantee. And so we could pass a cordon of AAA around renewable and emerging assets. And the third thing we're doing with Brazil is we're saying, well, let's look at this foreign exchange risk. Let's look at this pro-cyclicality. The vast majority of FX risk in the long run is actually inflation risk. Mm-hmm. So we make all of the revenues of our projects inflation indexed, which is actually quite common in Latin America to begin with because of the history of hyperinflation. So now we get rid of that part of the inflation risk, and we as a development bank, we will provide a hedge on the real exchange rate. The real exchange rate falls a tenth of what the nominal exchange rate falls. We'll provide a hedge on that, and so projects can be hedged fully on their foreign exchange, and that's the way to change this asymmetry that is stopping money flowing.
That's fascinating. Of course, we're addressing a specific problem that ties into a bigger perhaps misconception about risk and about the solidity and strength of economies around the world. So thank you so much. This is fascinating. Now, I promised to allow for some questions, and I believe that there may be a special person I would like to invite to ask a question, hoping that Shazia is her honor who... Are you here? Yes. Hi. Welcome. So as we said, we want to use this not just to allow to give a stage to the big names of the international climate discussion, but also to the big names, the younger names outside the finance and governments.
Yeah, so at first, congratulations to all for this important conversation. So I have a question for you. And as a young Brazilian climate advocate heading toward COP30, I've seen how the climate finance gap remains a major barrier, especially for communities in the global south. So my question is, how can we ensure that climate finance, including innovative mechanisms like securitization and debt for climate swaps, actually reaches and empowers the most climate vulnerable communities by COP30? Thank you.
Thank you. So how do we make the most of these instruments?
So, excellent question. Thank you very much for your question. I would say that, firstly, we need public participation in public policies and regulations, and even so in corporate strategies, if possible. But when we are talking from the government side, I would say we are facing huge challenges to make the policies participative, but we have to insist in this, to insist in the dialogue. So I can provide you an example. We are building the sustainable taxonomy in Brazil. So this is the thing that is going to classify the economic activities, the financial assets, and the investment projects as sustainable. In Brazil, we took social goals for the taxonomy too. For instance, reducing inequalities, promoting decent jobs, guaranteeing rights, and looking into the inequalities from the race and gender perspectives. So we installed a governance that has a committee for public participation of 18 entities, and the peoples and indigenous peoples, they are represented there. And not only they participate on making the policy, but also the policy itself is going under public consultation. So our taxonomy spent 4.5 months under public consultation. And this makes a huge difference, because then the communities have the feasible opportunity to participate. So this is just an example. I'm sorry if I said for a long time.
Thank you. No, definitions are important. Avi.
I think it's a really important question. I would break down, I think we can do it, but we need to break it down. There is money that's needed for renewable energies, there's money that's needed to make our economies adaptable, and there's money that's needed to go to these most vulnerable people for their loss and damage of climate that's happening every day. Now, the last bit is $150 billion a year. Those other numbers are speculative numbers, and what we need, that $150 billion of loss and damage every year, that's being paid. It's being paid every year. It's being paid by the poorest, most vulnerable people. They're paying it in their damaged properties and their damaged homes and their lost jobs and their lost livelihoods. They're paying it. So I think we need to stop them paying it. That's where we need to tilt the overseas development assistance, needs to be focused, not on doing things the private sector can do on renewables, not on things the MDB should be bigger and doing on adaptation. We need ODA focused on those loss and damage people. At the moment, a fraction of ODA is going to loss and damage. We need almost all of it to go on loss and damage of the most vulnerable people.
So better focused public sector money. Thank you. Unless Ambroise, you would like to add a few thoughts. I would like to. We have 1 minute. Yes, and two hands going up. 3, 4. My goodness. Okay. Do you know what? I'm going to go with the gentleman. I think it's the gentleman at the back who raised the hand, was quicker with the hands, and I'll get a second question. We'll try to address them in 52 seconds. Very quickly.
Yeah. Thanks a lot. It's a very interesting discussion. I'm Tanvir from the Embassy of Bangladesh here, Council of Political. I have one question. So when you think about 1.3 billion in next 10 years, do we factor the loss and damage issues and also the Human Development Index? So we invest money, but if the education quality or R&D in developing countries is not improved, that means the capital cost in energy transition and climate actions would be expensive. Thanks a lot.
Okay, thank you. I'll try to get another question. Hopefully the organizers won't mind me overrunning slightly a bit. Just a second. Can we get the second question? I think there was someone else.
The lady
Sorry.
in red. Yeah.
I think that the lady in red, I've been told. Yes, right, the lady in red. So you're being singled out. So we'll try to address both these questions at the same time.
Okay. Hi, everyone. Quick question. One, how to balance in Brazil the conversation for public participation when we have a devastation bill running right now in the Congress and also plans to explore like oil in the Amazon. The other one is how MDBs can hold countries and projects accountable to not make investments in fossil fuels.
All right, thank you so much. Okay, who is going to go first?
Well, let me do the numbers. You can do Brazil. The numbers that we quote come from the independent high-level expert group on climate finance. They say developing countries ex-China need $2.4 trillion a year. So they want $2.4 trillion a year. That includes loss and damage. It includes loss and damage, it includes resilience, and includes mitigation. We can do it because the world invests $40 trillion a year, but that's where those numbers come from.
All right, thank you.
Can I just add?
Yep.
Because I will leave you on
Brazil, yes.
Just add on the question from the gentleman from Bangladesh. I mean, for many of the institutions, especially public institutions, but I'm sure it's not very different for all other investors, you don't do only green standards. You have also social standards. And actually, when you do a project, you need to meet all the standards. Otherwise, it's not just moving forward. So I don't fear that we are going to be good on green at the expense of human development. Okay. I think it has to come together, and that's how we work.
All right, thank you.
So, amiga, we have to fight back. So I think that what we saw in the Congress with Minister Marina Silva is a perfect example of how to behave and how to be brave enough to don't let things like that happen. So she went there by herself to prevent the environmental licenses to be flexibilized in a way that was so brave that all the country united to be with her. I know it's not easy, it's just an example, but that's the sort of things that people must do.
All right, so politicians clearly play a big role, but it has to be said, I need to play a little bit an devil's advocate here, that oil companies, of course, are reversing, right? They are actually doubling down, some of them, into new exploration. So it's probably going to be a tougher battle in the future. I don't think I can take more questions, otherwise the organizer is going to be really upset with me and just not invite me back again. But equally, I'm sure that our panelists are going to welcome any questions from you off stage. Thank you so much for a wonderful conversation. Thank you, Avi, Cristina, and Ambroise, for sharing your thoughts with us. Thank you to all of you for such a lovely and lively participation. Anyone interested in media coverage about climate finance, sustainability more broadly from a commercial banking and a development finance perspective, please do sign up to The Banker. And hopefully we will keep in touch with a lot of you. Thank you again so much.
Thank you, Sylvia.
All right, thank you.